Hi, everybody. Welcome to Friday's Focus on Finances. My name is Jamie Fleming, and a few weeks ago, I spoke to women entrepreneurs about home, business, and family balance. Today, I'm going to talk to you about home business and your own money. Generally, women entrepreneurs are a bit averse to taking debt as it's often felt that rates are too high or there's a fear of losing control. This is all the more reason why women entrepreneurs must have their personal finances in order. Sometime back, while addressing a group of women entrepreneurs on personal finance, I asked them about how they manage their personal monies. I'm still taken aback, even after 30 years of talking to women business owners, that most of them still leave the household personal finances to their husband or significant other. Or if they're not in a relationship, they dedicate very little time to their personal financial management. This still surprises me, as it is with their personal money that they started off their venture, and now they're so consumed by their businesses that they've left little time for money management. And if they have left any time at all, they've left it to someone else, and usually not a professional. And again, if there's no real management of household finances over and above paying the bills each month, how is your business going to be in order as well? It's funny because most of them also wanted to know how they could improve their business finances. But again, if you're not managing your personal finances, you're also likely not managing the financial aspect of your business very well either. At least not in a very efficient way, right? So it is a well-known fact that most women entrepreneurs do not actively look at loans when they start off, since they feel they would not get one due to lack of prerequisites that lending institutions have. So they start their business using their personal savings. I just interviewed a woman that, although she's now created an incredibly successful business after 17 years of being an entrepreneur, she used her entire retirement savings and pension from the university she worked for over 24 years. She used every single dime of it. With that, she admitted she also took a huge hit in penalties and taxes and likely gave up more than 40% of the lump sum amount she received. Now, this particular entrepreneur is now on her way to running a business that is generating over 7 figures in annual revenue. However, with that said, there may have been financially more efficient ways for her to fund her business without giving up her entire life savings and personal wealth in the process. The common challenge faced by smaller businesses is that of payment cycles not matching the payouts to be made for salaries and expenses such as rent. Entrepreneurs who are running businesses with 5 to 20 people typically pay salaries to the staff and take care of regularly monthly expenses first, and pay themselves only on an as-needed basis or once there's enough cash. Here too, the amount may not be fixed. Because of this, if there is a short-term requirement in the business, they bring in money from their personal savings and vice versa. The other huge issue is that of demarcation between business and personal expenses. Owners of small businesses tend to mix their expenses, which from an accounting perspective is not recommended. The seriousness of keeping business and personal finance separate, however, present in all businesses that are set up as private limited companies, is more prevalent. This is most certainly due to more stringent company laws that these companies are subject to. Also, many women entrepreneurs I spoke with are not comfortable with investing their excess cash in anything but fixed deposits, as they just don't know when they're going to need it, and they don't want to take any risk on the surplus generated by the business. This is understandable on one hand, given the reliance on cash flows to run the business, but this can also diminish your purchasing power if too much cash sits for too long. Much of this is because there isn't a business plan in place that dictates how much you should keep liquid in the short term and how much you can invest for medium and longer term goals. Given the dependence on personal savings, especially in the early stages of starting a business, wouldn't it be imperative to manage personal finances as well, like a business? When I've had this type of discussion with my new entrepreneurs, something finally clicks, as most of them have never thought of their personal or household finances in that way. Here are a couple things women entrepreneurs or entrepreneurs in general can do before even starting the entrepreneurial journey. First, be involved in managing your family finances. Just because you're under pressure because of the new venture, you cannot not be involved in taking care of your personal wealth. Discussions with your significant other and family members will actually help get everyone on the same page so that they can then in turn be supportive of you and what you're wanting to achieve and accomplish. Next, get your finances in order and check the impact of moving funds from family finances to business. Are there loans that can be partially paid before starting your venture? And what are some business loans or grants available to you? Next, check if you have the right amount of life and medical insurance as well as disability insurance. When women especially move from jobs to starting businesses, in my experience, they actually just tend to forget about insuring themselves. It goes without saying that these coverages are extremely important and serve as a critical financial safety net. Next, as nothing is certain in a business, having an emergency fund that can be used for contingencies is absolutely essential. Many times, contingency funds get used to lend to the business for short-term needs, and this is not advisable. Again, having a business plan as well as a personal financial plan in place will help dictate what kinds of funds you need, where they should be stashed, and what to do going forward. Next is remember that irrespective of the stage of your business, retirement planning is crucial, and you should not divert these savings to your business, although many people do, and it can be to your detriment. Again, one must not stop investing towards one's financial goals, especially retirement, due to the unpredictability of a new startup business. If the business doesn't work out, one needs to still feel financially independent to carry on. Hence, having your personal finances in order is absolutely vital. Next, and this is one that I see most entrepreneurs putting off, especially women entrepreneurs, pay yourself a regular salary and make regular investments towards your goals from the very beginning. Next, please, this is so basic and so critical, yet it gets done at later dates than it should, is keep business and personal expenses separate. At some stage, if you're looking for funding, lenders and investors will view this favorably. Having a separate personal and business account is essential for even sole proprietors, especially for sole proprietors. Having a business entity separate from your personal identity will also indicate a more professional attitude. It's also a good idea to invest surplus cash into liquid funds, as these can give better post-tax returns compared to them sitting in a non-interest bearing checking account. And the extra income could be used to tide over the leaner months. Finally, I always believe that every woman entrepreneur must have what I call a me fund, a fund where you invest every month, which can be used the way you want to and when you want to. So all women entrepreneurs, while we are busy with our business, move a part of your salary towards the me fund, because the thing that drives you and keeps you going may change over the years. This also allows for what I call regular self-care, so you can balance your hard work with replenishing your passion and drive to succeed. If you're curious as to how these strategies can work for you and your business, please take advantage of our complimentary consultation and set things up right from the very beginning. If you're already in business, we can assist in implementing these strategies and more so you can run a highly financially efficient business going forward. Thanks again, everyone, for showing up, and we will see you next week on Friday's Focus on Finances.